Elon Musk's net worth just hit $500 billion. $500 billion. Meanwhile, regular families are juggling two jobs, struggling to pay rent, skipping groceries, and searching for bankruptcy lawyers more than at any point since 2008. The top 1% now holds more wealth than the bottom 90%. And while the Wall Street keeps climbing, the Main Street is breaking down. So why does the market keep hitting new all-time highs while the real economy feels like a runaway train headed for a crash? And what happens when this bubble finally bursts? Stick around because I'm going to break down why the rich keeps getting richer while everyone else keeps falling behind, and what this massive wealth transfer means for you. And if you stay until the end, I'll show you exactly what you need to do to avoid becoming one of the sheep that gets slaughtered when this cycle turns. Before we move on, if you're new here, I'm the trading actuary. I'm an actuary by trade who spent over 10 years managing risk and forecasting billions of dollars for Fortune 100 firms. Now I run my own business intelligence and risk assessment firm, and I bring that same risk-focused mindset to investing and trading. I've been doing this for almost a decade and wanted to share that knowledge with others who are just as passionate about finances, the economy, and the markets. I also run a free newsletter where I break down trade ideas, technical setups, and much more. Just this month, readers saw setups that returned sevenfold, and they were shared days and weeks before the breakouts happened. If you want to join hundreds of traders and market enthusiasts who are already using it, the link is in the description below. Make sure you get on it. Alright, now that you know who I am and what I do, let's get into this. Let's tell the story of two Americas. In the first America, people are hustling harder than ever before. Two jobs, unaffordable housing, rising rent, maxed out credit cards, and prices that never seem to stop climbing. Google searches for sell my house fast, second job, and bankruptcy lawyers are spiking. Families are skipping meals, stretching paychecks, and falling behind on bills. Essentials cost more, but wages buy less. This is the Main Street. You can see it in wealth charts as well. The bottom 50% of Americans own a sliver of the pie, while baby boomers and the top 1% hold the bulk of America's $163 trillion in assets. In the second America, billionaires are stacking wealth like it's a rigged game of Monopoly. Elon Musk alone added more wealth in a single month than most countries generate in a year. Tech stocks now make up over half of the US market's value, while defense stocks have sunk to record lows. Institutions and hedge funds are selling billions into this strength, while retail investors keep loading up, as always late to the party, and set up to lose. Recent flow data shows that retail is buying week after week, even as pros lighten up. Even leveraged equity ETFs are swelling, assets near the highest levels in years. Risk appetite is also at record highs. The S&P 500 keeps printing new highs, and while Wall Street is celebrating in their private yachts, Main Street is fighting to stay afloat. The system feels broken because it is, and it's not by accident. It's by design. You see, when Main Street hurts, the Fed steps in, cutting rates and pumping money into the system. Wall Street sees it coming and buys first. Prices jump before help ever reaches to ordinary people. Asset owners get richer while everyone else falls further behind. Look at the latest ISM Services report from October 3rd. It's clear stagflation. Growth is stalling while prices stay high. Think of the ISM score like a report card. Anything below 50 means things are slowing down. Right now, both business activity and hiring are under 50 while prices keep rising. In simpler terms, that means companies are struggling, jobs are shrinking, and your dollar buys less every week. That's not a recipe for record highs. Yet markets rip anyway, because bad news for Main Street usually means bailouts for Wall Street. And with a weak ISM like this, the odds of more Fed cuts go up. We have financialized pain. Misery for most turns into profit for a few. The top 10% of Americans now control over 75% of all equity wealth. The top 1% alone hold more than bottom half. Generationally speaking, boomers sit on the lion's share, while millennials and Gen Z combined barely get a slice. So when markets rally, most people don't win. Because they're not even playing. The wealth distribution charts make it plain simple. The rich keep climbing higher, while everyone else is left scrambling for what's left. Meanwhile, the fantasy stock market keeps inflating. Oracle misses earnings and then rallies 30%. Unprofitable AI names trade like they're the next Apple or Microsoft. Hype replaces fundamentals. Cheap money distorts reality. Prices jump, but paychecks don't. And regular families get squeezed while asset owners pull further ahead. And the AI story? Even Jeff Bezos calls it AI bubble, but says the benefit will be gigantic. Some analysts now claim this bubble rivals, even dwarfs, past manias. Whether you agree or not, the message is clear. Expectations are sky high. And when hopes are that big, little disappointments can break hearts and portfolios. The people with the most power over what we see and hear are getting even more in control. Almost all major US media outlets are now controlled by just a handful of billionaires. And speaking of billionaires, Oracle founder Larry Ellison just bought TikTok. He has openly pushed a world of constant recording, saying citizens will be on their best behavior when they know they're being watched. Now, his company controls one of the most powerful social platforms on the planet, putting our conversations, our data, and even our daily behavior under the watch of a billionaire who believes constant surveillance will keep citizens in line. This isn't just about stocks anymore. It's about who decides what you see, hear, and pay attention to. And that includes who gets pushed to the top of your feed. Platforms like YouTube love promoting influencers who flex cars, mansions, and lifestyles that look rich, but are mostly fake. Lately, I've been seeing this trend pop up, especially on those car dealership channels. A lot of broke folks, mostly younger kids, show up with Hondas and Kias they already can't afford.
I make a deal.
Okay.
Walk away with the M8.
So this is trading this.
Trading in this. That puts me a lot under.
You're at you owe 19, so you're like $4,000 under. How's a in my car for 72?
Yeah.
Usually with really high interest loans, low down payments, and ballooning debt. And then they try to trade up into BMWs and Mercedes.
So you owe how much on this?
I owe 31.
Cars that cost 5 or 6 times more. Why? Because they saw some influencer driving it and thought that's what success looks like. But that lifestyle, most of the time it's fake. It's for the screen, it's for the views. Behind the scenes, it's all smoke and mirrors. Debt, lease, rentals, and sponsorship deals. But the audience doesn't see that. They just see the mansion, the Lambo, the success. And the problem is, it works. It convinces people to make awful financial decisions, going from a car you can afford to a car you'll never pay off, all for just an image. You don't copy wealth by copying toys. You build it by investing in yourself first. That's why I started this channel in the first place. This is one more reason the divide feels so big right now. Because the people who understand how the game is rigged are already positioning themselves for the next move. That's what makes this next part so dangerous. Because the cycle, it always ends the same way. Wall Street sells into strength and Main Street buys late. And when the lights come on, someone is left holding the bag. But it doesn't have to be you. If you understand this cycle, if you prepare, you can position yourself on the right side of this massive wealth transfer instead of becoming another casualty of it. If you're tired of being late, missing the moves, and always reaching instead of prepping, then the newsletter is where you need to be. Gold breakout, we nailed it. Tesla, Coinbase, CrowdStrike, and others all share days, sometimes even weeks before the breakouts. The link is in the description below. Don't wait until you're chasing again. Usually right here is when I break down the full economy calendar and key reports for the next week. But we're in the middle of a government shutdown, and that means most of those reports are on pause until our beloved senators and politicians decide to get back to work and actually do their jobs. Still, I'll run through the schedule quickly in case we get a miracle and they decide to govern next week, which, let's be honest, feels like a long shot. Starting with Monday, October 6th, we have a Fed speaker. On Tuesday, we have trade balance and consumer credit. On Wednesday, we have FOMC minutes for September and more Fed speakers. On Thursday, we have Jay Powell speaking, and also initial jobless claims and wholesale inventories. On Friday, we have consumer sentiment and U.S. federal budget. On the earnings front, on Tuesday, we have McCormick. On Thursday, we have Delta, PepsiCo, Levi's, and Helen of Troy. Now, back to the issue at hand. So, what do you do now? Start by focusing on what you can control. Kill the debt, save more, build skills, and create income streams. And invest in assets that grow, not toys that shrink. That flashy stuff, it fades really quick. It never lasts. What lasts is the financial freedom. Most people stay broke not because they never had money, but because they spent it chasing an illusion, chasing a hype, chasing an image, all while ignoring what actually works: consistency, discipline, and time in the market. And yes, I've been tough on influencers, but not everything online is fake. Some people have made it, but they didn't flex, they focused, and they didn't gamble, they grinded. And that's the mindset it takes to win. Because in this game, just like in real life, it's not about luck, it's about consistency. Anyone can get that one win, but lasting success, that's built on stacking small wins, managing risk, and playing the long game. And if you want to know where the real money is flowing, where billionaires and hedge funds and institutions are putting their cash right now, check out my latest video on the top 5 sectors smart money is rotating into after the rate cuts. We're talking about gold, metals, pipelines, nuclear power, AI infrastructure, and much more. So make sure to check it out. And if you want deeper breakdowns than what I can share here, join the free newsletter. I send it out a few times a week, covering macro analysis, chart setups, technical breakdowns, and trade ideas. Plus, you'll get access to my free trading tools, and the link is in the description below. If this video helped you, give it a like and subscribe so you never miss the next one. Now, let me ask you, do you think the market is about to crash, or are we just getting started? Drop your thoughts in the comments below. Thanks for watching, and I will see you in the next one.